Now, data from the National Bureau of Statistics shows that a 6.1% decline in Nigeria's second quarter GDP in real terms. And I have Johnson Chukwu, the CEO of Cowry Asset Management, and Bismarck Rewane, the CEO of Financial Derivatives. It joins me now to break down the numbers. Thank you so much for joining me on the show today. And let me start by getting your thoughts on these numbers that we're seeing so far. Let me start with Johnson and then get to Bismarck.
Well, thank you for having me or having us. The numbers we are most expected, as we all know, the economy was locked down for the 3 months of the second quarter of this year. The Nigerian economy was actually locked down on Lagos, Abuja, and Ogun State. We are locked down on 31st of March. And we saw a period of 3 months where there was virtually, the economic activity was at standstill. So there was anything other than what we saw would have been unexpected. So I had expected that we should see a contraction in the GDP in the second quarter of this year. Nigeria is not the only one that is facing similar GDP contractions. We are seeing almost all the countries that publish their Q2 GDP figure contract with the report that showed that the economy is contracted.
All right, Bismarck, let me get your thoughts on this.
First and foremost, the economic disruption, both for supply chain disruption and slowdown in demand, had started globally since the first quarter. Well, if you take the cumulative contraction in economic activity, first quarter 1.87 plus minus 6.1% in Q2, you have a cumulative contraction in economic activity of 7.97, which comes to an almost equivalent of 12 trillion naira. When you look at this and look at it in the context of how much we have for the economic sustainability plan, which is 2.5 trillion naira, which is about 2% of GDP, you will find that the cumulative contraction year to date is about 12 trillion naira, which is the equivalent amount of the budget for 2021. So what has happened is that there's a lag between when you slow down and when you feel the effect. And so, yes, it was widely expected. But again, could it have been better? And should we have done certain things to have reduced the impact? So Q1, Q2, we are minus 6.1. Q3, which is ending in another month, it's going to be worse than 6.1. So technically, we're in a recession. How severe is this recession? And how long will it last before you come out of it? Becomes critical. And what steps have to be taken immediately to reduce, one, the impact of the recession, and two, the length and duration of that recession. That's what we should be focusing on right now.
All right, definitely quite a lot to ponder on talking about the severity of this contraction and the ways out. But Johnson, let's get your thoughts on the possible fiscal and monetary responses we can expect.
The federal government of Nigeria has actually come up with what they call an economic sustainability plan, where their plan is to inject about 2.3 trillion naira into the economy. And the expectation is that with just 2.3 trillion naira injection, the economy will only contract by 0.59%. If you look at the H1 2020 GDP performance, cumulative GDP performance, we actually have a contraction about 2.12%. So in effect, for you to have a full year contraction of just 0.59%, you are going to have second half of this year should have a positive growth. And just like Bismarck said, that might be a tall order for one to expect. So in terms of the fiscal authorities stimulus, even the 2.3 trillion naira that is provided under the economic sustainability plan, more than 1.15 trillion of that is coming from the monetary authorities intervention funding. The portion that is supposed to come to the fiscal authorities are less than 1 trillion. But most importantly, if you look at the budget as an instrument for stimulating the economy, the budget will be constrained by funding gaps. We're already seeing a lot of funding stress on the part of the fiscal authorities. We've seen oil price has remained below $45 per barrel. We know our crude production, based on the current topic quarter, is just about 1.4 million barrels. And if you look at other revenue sources, tax revenues, revenue from independent sources, government agencies, SOEs, we're also seeing a decline in revenues from virtually all the income heads. So it's going to be a tall order for the government to stimulate the economy from fiscal side. The monetary side has a limit to its ability to continue to expand liquidity by ways and means, by quantitative easing. So I think in terms of intervention, the government is actually highly constrained because we do not have the reserve to support intervention from our existing reserve. And we're already seeing the liquidity expansion bringing a lot of pressure on the foreign exchange rates. We've seen Naira move to close to 500 Naira to a dollar. I mean, about 490 Naira to a dollar in the parallel market. Part of it is one, a desperate need by foreign portfolio investors to exit, and also the fact that we are expanding liquidity in the economy without commensurate increase in productivity. So this, in terms of what the government can do, the government is highly constrained by one, its capacity to raise funding for the budget, and two, the limit to which monetary interventions can support economic recovery.
All right, Bismarck, still on policy response, we're seeing that COVID-19 is coming now to wipe out the recovery efforts we've seen since the last recession. And I'd like to get your thoughts on the importance of building a structurally resilient economy with our response plan.
First and foremost, COVID only worsened a bad situation. The economy was anemic before COVID. It was already slowing down. What you had in Q1 was a lingering spillover of Q4 in certain sectors. Look at our 5 trading partners, all of them, China, India, the United States, UK, and EU, were all facing difficulty in February and March. So the fact that you had some spillover into Q1 and the 1.87% growth you got in Q1 was just an anomaly. The reality today, and Johnson mentioned it, the limitations of fiscal policy are there. The limitations of monetary policy and the heterodox policies, which on one hand, it's creating more, at times creating more difficulty. So let's step back a little bit and decide on one thing. The national income identity equation says that there's government, there's investment, there's consumption, and there are net exports. We can't do anything about net exports. We know that our exports today, the price of oil is higher than what it was in Q2. And also the demand for our imports has also reduced. So that can take care of itself. The only way to go out of this is to increase productivity. Productivity means that those companies and those factories that are victims of forex rationing at this time by the central bank need to get back to work. So what do we have to do? We have to adjust our exchange rate by unification, 1. 2, we got to sell forex to these guys so that they can produce, and that will help bring down inflation, create employment, and create output growth. While doing that, we restructure some of our debt obligations, international debt obligations, in such a way that we have some breathing room to do that. All of these policy responses put together, and more than anything else, you'll find that investment, which is the key variable, has not been addressed. The ESP, which is 2.3 trillion naira, is extremely constrained. It's less than 2% of GDP, and yet you're having a contraction of total contraction of 8% of GDP, which is about 12 trillion naira. We must do something to the other variable is how do you get domestic and international investment to step up to the plate by giving them all the incentives, match funding, tax incentives, and all of these things to bring it back, to bring them to the party. We cannot do it. We cannot do it government expenditure. We cannot do it with heterodox monetary policy, because we now have what we call a quadrilemma. Quadrilemma is you have 4 unpleasant options, 4 unpleasant variables. 1, negative growth, which is a recession. 2, high unemployment. 3, weakness in the currency. And 4, we are talking about inflation. So when you take all of these 4 put together, you have the quadrilemma, not normally a dilemma, not a trilemma. We now have a quadrilemma, which means that the variables that are dealing with are probably more outside your control than within your control.
All right, Johnson, in dealing with this quadrilemma that Bismarck is talking about, I would like to get your thoughts on some quick fixes or low-hanging fruits that we can reach to. Bismarck was earlier alluding to the fact that we could look at productivity, but what are your thoughts?
Well, unfortunately, there are no quick fixes. There are certain things we need to do now, hoping that with the expectation that we should have the outcome will be positive in the near term or mid-term. Take, for instance, the issue of harmonizing the FX rate. Clearly, a lot of foreign portfolio investors are worried that if you do not harmonize the FX rate and eliminate the multiple exchange rates, that someday they're going to come in at this point, and when that exchange rate is harmonized, you're going to see a devaluation, and whatever gain they make from investing in your in your instruments, in your securities, will be lost from exchange rate devaluation. Secondly, we have about $2.5 billion of foreign portfolio investment that trapped in the country, according to the Bloomberg report. And if that figure is anything to go by, unless we adopt the policies to allow those funds to exit, you're not going to, people who want to come in will not come in. If you have people's funds, if you have investors' funds trapped in your economy and they can't exit, then you are certainly not going to appeal to those who haven't come in. So clearly, central bank has to do something about that quickly. We need to allow further adjustment in the FX rate. We need to provide funding for those portfolio investors who have sold their instruments and want to exit, so that we can make it attractive for those who want to come in. So I think that's on what you may consider a relatively short-term approach to addressing the foreign exchange quagmire. Then you look at the issue of inflation rate. For me, my approach to inflation is that we need to determine what's our priority at this point in time. You really can't control all these macroeconomic variables at the same time. So if you think if the priority is to stimulate economic growth, it may come at the cost of higher inflation. So we should be ready to deal with the higher inflation, and once we improve productivity, then inflation rates could trend southwards. On the FX supply, it's going to come from we have three major sources of FX supply in the country. One, earnings from crude oil sales, which account for more than 80% of our foreign exchange earnings. Second is portfolio investments. And then third is inflows from diaspora remittances. Three of those major sources have been negatively affected. We are dealing with lower crude oil price. At the same time, we're dealing with low crude production. Then on foreign portfolio investment, I just mentioned the constraint, one of the limiting factors of foreign portfolio investment flow. Because if you have investors' funds trapped in your economy, nobody wants to come in. The third leg of it, which is diaspora remittance. Clearly, you see a lot of Nigerians that live outside the country are struggling to sustain their employment in those countries. So you don't expect to see a material increase in diaspora remittance. So in the meantime, the options are, can we access funding from loans? Can we access multilateral loans at relatively good rates? In terms of the Eurobond market is very difficult now for us to approach. So we must, if we have to access funding, we have already accessed funding from the IMF. We are trying to get funding from the World Bank. We also approach Africa Development Bank and Islamic Development Bank. So we need to drive those funding sources as long as they're coming to us at very friendly rates. So I think those are some of the, I wouldn't call them low-hanging fruits, but there are things we should do now. One other thing I've not mentioned is the issue of liberalizing the price of refined petroleum products. The NNPC MD and the government have been saying, the Minister of State for Petroleum have been saying they are liberalizing the price of fuel, but we know that the current price of fuel, the pump price of fuel, is not reflective of the international market price of crude or the price of flat. So there's still some level of subsidy which we're not admitting. We need to, at this point, free up government resources from such not very productive investments or outlets or expenditure, so that whatever is available can be invested in critical sectors of the economy.
All right, then, Johnson, there's quite a lot to look at. Definitely, we'll keep our eyes on. I'm afraid that's all the time we have on this show today. But definitely, thanks a lot for your contribution on the show. I've been speaking to Johnson Chukwu, the CEO of Cowry Asset Management, and also Bismarck Rewane, the CEO of Financial Derivatives.